Welcome back, ladies and gentlemen, to the All In Crypto podcast. Today, I'm excited to be reintroducing a familiar guest. Of course, I'm talking about the man, the myth, and the legend, Mr. Francis Hunt. How are you today, Francis?
Delighted to be back with you, Rupert. Thanks for having us on.
Yeah, the pleasure is all mine, and it couldn't be more timely. Certainly when we look at Bitcoin and the cryptocurrency charts more broadly, we are currently breaking out or certainly leaving behind the pullback that we've been in for Bitcoin since March. And I think this has broader ramifications for a lot of other things that I'm sure we're going to be diving into in this video. So what I'm going to do, Francis, is let you take it away. Give us your kind of overview on what you're seeing right now with Bitcoin and the cryptocurrency space.
Yes, thank you for that. So the really interesting thing is, and you'll probably be familiar with this, Rupert, because you know how we speak, but we talk about the anti-fiat realm as a set like this, and we call the God market of that gold. And the anti-fiat is also an anti-debt because money is borrowed into existence. So fiat debt, treat them as synonymous. They're two dancing partners tied at the hip. And we always say there is a firing order when things start to unravel. It's like this big V12 Ferrari Cylindre. They've got a brand new one out. I'm eyeing it up. There you go. And what you actually have is you have a sequence of numbers, and it's not 1, 2, 3, 4, 5, all the way up to 12, which is called the firing order of the cylinders, so that they have a cylinder at a different elevation, but each one synchronized so that you get a continuous flow of power. So the gaps in between, one is at that stage, one is a little bit more. Each one is in a synchronized dancing order where one cylinder is always finishing, another one is getting fuel, another one is expelling the fumes, etc., etc. And why am I saying this? Because to understand and maximize this opportunity, you want to be in the runners when they're running and pivoting out into the next runners when they are running. So in a simple term, that would be Bitcoin at the beginning of a bull market and then into next tier, second and third and fourth tier by market cap, and then the really small sketchy stuff, maybe for those that like a little bit of degen, closer to the end, which is going to be a lot narrower but a much spikier ride. And in the anti-fiat category, crypto is a subset. So it's a smaller circle inside the bigger circle. And the king of that smaller circle, but still significant circle, is Bitcoin in that. So you should generally always be in Bitcoin to some weighting, and in fact, your largest weighting in the beginning of a bull market. And there's occasionally small differences by bull market, but rarely does this change too much. This is one of the reasons why we do technical analysis with Bitcoin dominance, and we'll be showing you that in due course. But this particular bull market has an extra interesting detail. And we are currently undergoing, this is the key point that we make, we are currently undergoing a debt-based collapse. And it started in 2020. You had the final blow off. This is our key call that we made. We felt very lonely out there. No one else was with us, although there's a lot more people that have joined us subsequently. But the call was in 2020, in August, we shorted TLT, which is a long-term ETF, that debt was beginning an irreversible decline. A, because fundamentally now it's more obvious to see there's an unbelievable new flow of debt that the market can't absorb. B, because of the bifurcation that's going on. Other countries less supportive of owning treasuries and dollars after the Russian expropriation of funds. And a variety of other reasons that is undermining the SWIFT payment system and the asset class that is debt and the currency that is the dollar within that debt. That's led to the Fed recently doing 50 basis currency point cuts, which is a double cut, and the US 10-year actually going up in spite of. That's contrary direction. That means the value of the debt going down and the cost of money going up. In fact, if you're in the States right now, I think you're looking at 7%. It might vary by credit score for your 30-year fixed deal for buying a property. This is going to bring the heat in their overheated property market immensely, because new buyers are going to have to get new financing, and banks are going to do it in all of these ways. So that's what's going on. There's a debt-based crisis. And debt is also a reserve asset for the likes of the BRICS nations and other nations, by the way. So when they were selling excess goods to America versus what they were buying from America, the difference was made up in debt instruments and dollars. So they would buy the difference and sit with those as assets. Now, they got a 45% collapse after 2020, when the Federal Reserve increased rates they went to 0.39 on the 10-year, right the way up to 5%. So I'm talking a lot about debt, and you're wondering, what's this got to do with Bitcoin? Because the collapsing debt market means this is no longer seen as a reserve asset. For 40 years, it went up in value very slowly, and much less volatile than the stock market, which was why it was a stabilizer component to the 60-40 portfolio. 60% in your equities for your alpha and your fast movers and your growth. And when you had a bad equity year, you would have your bond market that would do a little bit better, because the people who were afraid in the equity markets went to the bond market and played it safe. And all the time you were also earning a small yield. It got ever smaller because, of course, you had Volcker's super high rates right the way into the 80s. And as a result, the yield is now negative to inflation, especially if you took a real inflation rate, not the BLS's number, it's super negative. But now you also got a mega 45% decimation from 2020 to 22, 23 in that massive rate hike, which is contracting the value of the debt. So what does that mean? People no longer see this underlying the fiat debt system asset category as being a stable reserve asset. They start looking for something that resembles a different financial system, because they don't want to be buyers anymore, and they see Janet Yellen is churning out $1 trillion every 81.5 days, down from 100 days. They are absolutely gone spending in a corruption whirlwind with Israel, Upper Israel, called Ukraine for now, and everything else going on in there, and everybody else is picking up bungs. They are stripping the last remnants out of, one of the great hotels. They are taking down all the silver from the lobby, the light fittings and everything. You're watching the final no rules, complete thuggery, corruptive asset strip with a debt-based surge. We're going into parabola status. What that means is there's devaluation going into the opposite side. There's beautiful symmetry to this. If you keep issuing this debt at an ever-growing rate, it's less desirable. Scarcity is part of desirability. Bitcoiners know this. That's why they talk about 21 million tokens, etc., etc. So what's happened is, first, the king of the anti-fiats has started to run on that. It is the original and the first. This is why I've never been for the antagonism between Bitcoin and gold. It is the first to start running, and you have experienced a gold-based run, and we've been in that. We've been keeping our community in that. We've been trading it, and we've been investing without leverage as a long-term hold to see us through this entire reset and collapse process. But the interesting part about this is now the 6-month holding period that Bitcoin has actually been underperforming gold for now, finally broke 12 days ago. And now I'm going to refer to the charts with you. 12 days ago, we got a call, and we said that right there was the break of the top of this broadening structure that Bitcoin had been in. So if I just redraw this, tighten these lines up, they shifted a tiny bit.
Just whilst you do that, Francis, isn't it unbelievably interesting? And I think this is what sort of flares our concerns in regards to the Satoshi narrative, that Bitcoin really came about as an adversary to the fiat systems and what backed it being debt. And we're at this stage now where actually we're on the cusp of the collapse of that.
Oh,
this
yes.
is just something, it's almost too good to be true, the whole narrative. I'm sure we'll talk about that. I didn't want to sort of disrupt your flow there, but for people that, this might be going into a little bit of a high level in regards to debt systems, and you might not be familiar with the fiat system just yet, just know that Bitcoin was created solely for this problem. And there's been an escalation of that problem, likely deliberately, most probably deliberately. And we're now at that stage where the emperor is starting to realize that he has no clothes. I'll let you continue, France. I just wanted to sort of say that for anybody that is unfamiliar with some of
very
this.
good. Very good segue. And it is absolutely was created for this time. And it's probably also diverted some money away from going into gold that they hate.
Yep.
So central bankers hate gold. They don't want to talk about it. Their best game is ignoring it. You've just had a new high today in gold, by the way, a new all-time high, which is, rather than bad, good for Bitcoin because the anti-fiat category is going. It means loss of confidence and further movement out of the debt and fiat-based alternative, which is in a high state of collapse right now. And things go slowly. People don't realize. They say, when's reset? You're busy witnessing it. It's slowly at first and then suddenly very fast. And this is how fortunes are made in a short time. So back to this, technically, you've been in a bull market this period since the ETF announcements, BlackRock and all of that, that took you to just under 74K. And since then, what's actually been happening is you've had 6 months of nothingness where you've largely been lower than the 74K with quite a few painful sell-offs. This was the carry yen trade that was certainly very brutal. You had grinding down a whole bunch of times over here, some reflations. Every time you got to the capping descending grind line, you were, however, turned back. There, and of course at the high. And we said the key event is after, and we bundled these up and said there's 3 key impulses in this. And the next time we go to the upside, you will probably be for real. You're going to break out of this broadening, descending megaphone structure, which sits on a bull pole. That is our theory. You're not going to hear anyone else refer to that like this, because it's our theory and it's continuation pattern, and you need to understand why. That's what we go through in the program and the course that you know. And we had the yen carry trade spill where you actually got a 49. Don't forget, we called that 70 collapse because it was at the capping descending grind line and the round number. We actually had an intersection there. It was quite a beautiful moment there, and you got rejected there. And we said Bitcoin's likely to be rejected. It's not yet at its 3rd time. So we're not perma bulls. We're saying for now, not yet. And we didn't expect it to be so brutal. And then, of course, the yen carry trade came out. You had the dollar spiking. It's hard for Bitcoin to go up against the dollar when the dollar is having a spike. And a lot of risk assets sold off. I did highlight, though, by the way, that gold only came off less than 3% and was at a new high within a week, whilst Bitcoin obviously wore that a lot harder. Why? Because it was still stuck in a malaise period. This started from March. And the good news is I'm calling end of the malaise because, and we did this 12 days ago, which was the first time we posted on our crypto channel for quite some time, when you broke this. And we said, don't scream in and run, because now that it's broken the key descending capping grind line, what it's probably going to do is churn a little bit and do a return move, which is exactly what it did. But in due course, not too far off, you will now reassert to the upside because you have broken a continuation pattern. And the longer and the bigger the continuation pattern, the longer the likely upside move. So all those 6 months of pain of going nowhere and everyone wondering what's happened to our Bitcoin bull market, what's happened to crypto alts bull market, especially if you're a long-suffering ADA fan or a DOT fan, that's just been awful. This is about to get better, and it's actually reasserting rather nicely since it's done that. So pull back to this, and this is the key talking point. When you came on, you were going to talk to me about reset and gold and silver, and I said, hey, you're all in crypto, and I've finally got something positive to say in the crypto space. Give me that chance to actually hit to your core audience and say, this is good. It is real good. And we have a 145. So we've never thrown out big numbers. If there's no technical pattern, we've never thrown out a big number. That when we mentioned the 145, it's the first time we ever mentioned something above 6 digits. Every time it must have a geometrical technical projection. We're not Max Kaiser that'll say 2 million, 1 million, 500,000, or some people 250,000, because they're nice big saucy numbers and we're trying to outdo somebody for a headline, maximize FOMO, maximize greed reflex, or anything. There has to be a technical justified target. We are technicians before anything, hence the HVF method that I mentioned. And so this is a very, very important moment. And we're released, by the time people are watching this, there will be on our Crypto Sniper, the Crypto Sniper channel, Bitcoin soon to outshine gold's recent headlines. And that is because as a smaller market cap, if it really starts to get it on, the movement up in Bitcoin could supersede gold. In percentage, fairly easy. It has done many times before, even though it's at a much bigger number, almost 72,000 as we watch. In terms of total market cap, it's about 1.4, sub 1.5, whilst you're probably at 10x that in the gold market. It takes 10 times more juice to move the gold. So this is a key moment. And I'll also post the Japanese flush out with the yen trade. I want to also highlight that you had a series of higher highs and higher lows here. And then you got the breakout right there and your dip return move. So this is altogether pretty positive. It also points to a reduction in the volatility. And you know we love that. So H for Hunt, V is the middle letter and probably the most important. It's the volatility, stupid, as I sometimes like to say. It's a leading indicator for an upside break. What has happened? You've got an upside break. And unlike all traditional technicians, we identify upside breaks on rising wedges as a type 3 event. And we have theory for it because it happens far more often. While other people go, wasn't that supposed to go down? It's a rising wedge. No, inside the macro context of everything I've described, of the major bull pole from the ETF at the 25 all the way up to the 74, this is about to be a break to the upside. And that's why we put everyone on red alert on our channel there. And we said, but don't buy right away. It will churn. It'll go quiet again. This is sneaking out. This is what I call a walkout. It's like slipping for the door. Like that. It's kind of just letting it go. It's not grabbing headlines, and that's the best way. It's actually great news, Rupert, because if it just went straight away to super surge and pumpermentals, the volatility starts coming, it's the beginning of the end. Everybody else thinks this is awesome. When it starts hitting too bigger numbers too soon, too fast, it's coming to the end. It's the blow off. What we're going to see here with this walkout is actually, if it can walk out for an extended period with very small pullbacks and consistently knock, this is what gold done. Gold has actually walked out from 1984, the dubious number in February, right the way through to an all-time high at 2780, which is nigh on a 45% move. And we aren't finished the year yet, and there's more to come. And that's what we want for Bitcoin. But Bitcoin's walkout will still be a faster walk than gold's. So it's a super good moment. Now, here's what everyone's going to do wrong. All your guys watching this, Rupert, are going to go buy their favorite alt again. This is a lengthy collapse, and go back to the V12. Play the cylinder firing order. Everyone should be in gold, not silver. Silver hasn't made a new high. You should predominantly be gold. You should be 66, going on 75, even 100% gold is not wrong. I'd already begun accumulating both, so I inherently have some silver, but it's my gold that's moving my mark. You know, I have an Excel spreadsheet. I can stick that gold number and that silver number. It's the gold number that's making me my money first. At the end, it will be my silver number, which will melt up my melt my Excel spreadsheet's face. But you start at the beginning, and it's the same for Bitcoin. People that have their favorite projects should still be in Bitcoin. Why? So if you're ready, I'm going to take you into the Bitcoin dominance, but feel free to jump in and unpack if you want while I get the dominance chart up.
Yeah, absolutely. Before we dive into the dominance chart, and this is one thing I'm certainly wondering, I know everybody else is going to be wanting to know, you know, if we can see the sort of projected target that you're looking at for Bitcoin based on that flagpole. So what sort of what sort of a target are you
Good
calling
question.
for? You mentioned, and you're extremely
Good
conservative.
question.
I mean, I've been a member of your group now for a year and some time. Well worth it, by the way, guys. Francis has alluded to it a number of times already. The HVF method, if you want to learn that, there's only one place to do it, and the link's in the description. But there's a lot of people that are going to be looking at this. They're going to see and acknowledge what you've just drawn, but they're going to say, okay, well, where does this take us before we dive into Bitcoin dominance and perhaps getting in line with that firing cylinder? Where does this take us, Francis? Where does all of this that we've just looked at take us?
Do you know what's lovely? And I've just realized now, doing this in prep for answering your question, is I've been talking about 145. You'll know that as a community member on an inverted head and shoulder as a key level as you're approaching that magic 150 number. Obviously, the 100,000 is the super magic number, but 150 is going to be a pretty seminal event. And I've just redrawn from the lows of the yen carry trade. You'll note the volume was high there. That was a real moment. And you'll see that the projection I'm getting is 144,363. And this is known as a confluence. I chose a Bitcoin chart. I haven't got all my drawings on because they're as messy as all hell. And I wanted a clean chart to start with you. But in actual fact, if I was on any of my other Bitcoin charts where I've done tons of work with one of the other exchanges, I think this is KuCoin. I'm normally on Binance. It's the higher volume one, you know, all the good reasons, and Stamp because it's got the big history and all of that. I don't use KuCoin as much, but you'll know the inverted head and shoulder has given a 144 target. So we actually have two separate, and this is the magic of the geometry of price behavior being applied. I don't suck numbers out of my thumb or any other part of my anatomy. They come geometrically from the chart, and I've just drawn one in front of you. It was being recorded while you were asking your question as I posted it up. And there's a second 144 right there. And the inverted head and shoulder, which is a bigger pattern that takes us a little bit further back. I'm not sure we've got all the time to draw, but I can certainly give you a quick sketch of where that number came out of, because it was very key important points also there. We are in a log scale chart for everybody. We do the neckline, as you know, in little boy baby blue, and we shouldered there and shouldered here. And that was at our key level of 47.5. We've raved and spoken about that. Extend that back. It goes to a neckline on the head and shoulders that gave you the bear market low at 15,000. Unbelievable. This, of course, is your big macro head. Many people will look at this and say, especially if they've been trained or read traditional technical analysis, and say, that's not a head and shoulder. We talk about complex head and shoulder reversal structures in our theory. It is for us, and it works. And the geometric target of this gives you 144. So what you actually have is confluencing. And I absolutely love that. And it's only because you asked the questions and you pulled me back because I was rushing off to do dominance charts for you, that you've actually given me this. And it's something I'm going to go remind my community on, including your good self. When you get confluences, it's incredibly powerful. So what you're actually getting is you're polling lots of different data points, which are different patterns. It's the same price data, but you're looking at different pattern structures within that. And you're getting a key resting point. That doesn't mean it's the end of Bitcoin and it doesn't go beyond. What it means is it's not a bad place to take some profits. Who wouldn't have minded of getting out at 59,000, 62,000 at the last bull market, and rather than wearing the loss all the way down to 15K in the bear market. So you have a confluence, two separate patterns of geometry. And this is a key point I just want to make right now for your viewers. Ignore most technical things, RSIs, MACDs, moving averages. They don't teach you anything about where you should place your stop, where your target should be, and at what point you should enter. Some people will say, well, MACDs can give you an entry. There's no stop placement with that. It's a lagging entry, and it is just mathematically reprocessed price data, delayed, divided out, turned into a smooth average that lags. And it is optimized for the data that's been, and it's suboptimal for the future data that will come. Trust me, everyone could have had a basic algo and made themselves millionaires if moving averages worked. So here's the three things that are leading indicators and actually give you some probability for success. First of all, before I tell you those three, you should be looking for asymmetrical. You listen to Paul Tudor Jones or any of these people, you're talking about losing very little money and managing losses very tight and getting a disproportionate reward when doing so. And that is usually not available. Again, why the HVF? The volatility gives you the funneling, which is the squeeze. Those are the key moments, and we specialized in them. And whilst crypto wasn't giving them to us, we were trading an HVF in gold at 1984 and smashing it with overperformance to where it is now. And that's the thing to go. Trade the asymmetrical reward, not the individual markets. Markets are like, a lot of people have a siloed approach. Oh, I trade this market, I trade that. I'm like horizontal. I trade the criteria. The principles of success, see, you trade the criteria. Very tightly managed losses, asymmetrical, fast moving, that take you quickly away from your stop rewards. And that's what happened. And if you have a look at this inverted head and shoulder for what I've just said, it's not an HVF, our favorite pattern, but did you get taken fast away from your entry on the neckline break if you chose a stop at the bottom of there? Yes, you did. Did it come back pretty close on a yen carry trade event? You've got to stick to the trade long term. You are now reasserting upside, and you've got 144 to potentially gain before you take some profits off if you're utilizing any minor leverage with clear-cut stops with known losses. Notice the phraseology I'm using here. So thank you for your question. And there's two separate patterns, both giving us 144, which is why you'll see in our YouTube, we've mentioned 145, 150, 144. We round up for simplicity. We don't try to be overly exact in something that is not an exact science. So targets must be run, and typically they are slightly overridden. So you may well trade the 150. You should trade the 145. There's often a blow off. Remember, I mentioned the volatility near the end gets big. That's when you spike through things, but you don't want to be holding too long, especially on leverage. Let me let you jump in there before I go dominance.
Yeah. No, absolutely. Yeah, I really want to dive into dominance because I'm sure many people are positioned in the altcoin market. Of course, should they be or not? We've just covered that. The thing with, I think yourself originally, I've been watching you for a hell of a long time now, and obviously became a community member, and it really did take my level of technical understanding, not just in regards to crypto, but markets more broadly, to that next level. Confluence, I love that word. Certainly when you see it in the charts, because when it walks, talks, and quacks like a duck, more times than not, it's a duck. All we're trying to do is stack probabilities of being right in our favor. That's really all we can do. And when, even in regards to that head and shoulders, even how it pulled back is very typical of what you'd expect for a pattern like that. So,
and it took a while before it happened. It's as a super big pattern. You've got to remember that straddled a bull market into the bottom of a bear, which is your head, and the first part of the next bull. So it took a while to happen. You can't get overconfident. You've got to stick to process. You have to trust your stop and your sizing, and you have to stay with the game, because otherwise you panic out. Oh my God, the world's ending. Japan is the yen. There'll always be a reason to panic sell. If you submit, again, I say, the average trader will stay in on greed, and only pain takes him out.
Yes.
You will, in fear, close your trade. This is emotive trading. What you need to do is submit. This is like putting your sword down and going before the king, to principle and method that supersedes in performance emotive reactions. Most people would have been shaken out of that trade watching that video now. However, if they've invested in becoming HVF method, they're more committed to adhering to principle and HVF. That's why people pay to go to smoke enders, to stop smoking.
Yep.
Because they have to get that angry with the outcomes they're getting to say, you know what, I want to invest to get rid of this thing or to be better. And they will go to smoke enders because they had enough and they're prepared to pay. And you need to be at that level with your investing and trading, because you think you're saving by not spending. And actually, you're riding a bicycle to Timbuktu, where I could have put you on a business class jet and flown you there in half the time, or a third of the time, a tenth of the time in luxury. But you pay for one, and you get a much greater outcome that more than covers itself. and people don't invest in themselves. Going to the dominance, you'll remember that we spoke for a lengthy period. You've been in 39 through to the zone around about 47%. We're as low as 39 over here, 38.89. This orange box. And we called this breakout over here when that happened. And we said you're going to have a steady increase. This is going to be a much more Bitcoin-y bull market than any other token. Yes, Solana had a run. Yes, Toncoin of Telegrams had a run, possibly, certainly outperformed. But most alts, you look at Ethereum, you look at ADA, they're not anywhere near their previous highs. This has been a languishing state. Why? Because of the ETF, but the ETFs didn't do anything for Ethereum on any note, the ETFs, and B, the need to have a reserve or a new reserve asset in a collapsing reserve asset environment. It's about the debt, stupid. The fiat debt system is collapsing. That is why after 2 rate cuts, instead of getting more valuable, the bond market, it got less valuable, and the market shrugged off the rate cuts and pushed the yield up. People weren't prepared to buy the debt yielding that rate. They're saying, we're bidding down here, where that means we get a better yield. We're not paying your prices with all the garbage of more that you're bringing. And that is key. Reserve asset status has been lost in the debt markets, which is part and parcel process of that being lost on the currency market. So that's where you start. It is the beginning of the failure. And who gets to gain? The ETF and the digital gold, along with the actual gold, is who's gaining. This year has been about being long gold, and for part of it, long Bitcoin, with a big 6-month pregnant pause that has been frustrating for many cryptos that is now ready to reassert. And it could be that Bitcoin jumps in line with silver with its firing cylinder order in, or maybe even pushes a little ahead. Will digital gold go a little bit, be higher rated than secondary precious metal? The industrial element of silver still means it relies on an economy. The economy, by the way, is wrecked. So the balloon is twisted. There's one very well oxygenated one, the military industrial complex, the bungs for arms dealers complex, the pharma complex, the media complex are doing great on all Yellen spending. However, the consumer is wrecked. The US consumer is wrecked. Houses available for sale. The borrowing is at more expensive. Credit card debt. Everything is at all-time highs. So you have a 2-tier financial system. The UK will be smiling because they'll be thinking of Keir Starmer and the 2-tier justice system. But there's also a 2-tier financial system. And you are the marks they aim to hollow out. My goal is to stop them from keeping you to being a financially serfed out, serfdom, UBI-reliant CBDC citizen that does exactly what its government tells you, which includes medical interventions and anything else they want to throw your way in a bid to reduce the numbers. I'm trying to keep you free by maintaining your wealth. Wealth is freedom. Totalitarian communism does not like people that retain their sovereignty and liberty. But we are going to fight this, and we're going to do it. And that's why I'm taking so much time to explain how the system works so that you understand that. Gold first. We are seeing Bitcoin move. And this dominance that I'm showing you here, I'll just dim the lights on all the lines. It's super messy chart. But you can see this is runaway. This is runaway. And why? Because it's the digital gold. It's the gold in the physical world that's running, and it's the digital gold that's starting to get its running shoes back on after a 6-month hiatus. Why? Because they don't want treasuries. They don't want treasuries that can lose 45%. They were supposed to be stable. If something can lose 45%, like Bitcoin, I can have Bitcoin because at least it'll go up 10x every now and then. Bonds don't go up 10x. They're lumbering old tortoises that go up very slightly and pay very crap yields. But the key thing is they gave stability to your portfolio, and they were counter-cyclical. When equities went down and people were afraid, they got bid up and they went a little bit more. So they covered a little bit of what you lost on your 60-40. By the way, the 60-40 was never a 60-40. It always used to include 5, 10, even 15% of gold. But during the Volcker years of pumping interest rates and devaluing the debt, we had a gold spike so high, they set out to demonetize gold, and they went financialization of everything. And nobody talks of a 15 or a 20% gold holding, let alone a 5 or a 1% gold holding. Most portfolios are stuck in 60-40, and now's the time you most need it. And the canary has been tweeting, and the digital version is now starting to show its strength. So you should be in Bitcoin. You should be in Bitcoin. Dominance says so. And I can certainly, we said a while ago, we see 60% falling. That's not even a prediction now. You're at 59.95. So I won't take any applause for that one, but it's going potentially well beyond that during this period. It's the financial reset, stupid. That's why the gold, that's why the digital gold is first and leading hardest.
Yeah, it's very interesting as well. Your comments I picked up on there in regards to, could Bitcoin also benefit from when silver's kind of piston is time to fire, being sort of somewhat secondary again to gold? You know, the really interesting thing, again, you spoke about confluence, and you spoke about confluence in regards to having technical confluence. We've got a flagpole, and we've got a target that we can predict off the break of the descending broadening wedge. We've also got that inverse head and shoulders. The interesting thing with the Bitcoin narrative is there's actually confluence further afield in other markets, in the sense that what you're expecting for gold to happen is very suggestive that also Bitcoin is going to dance in that rain. Also silver, you're expecting some real upside for. You've also spoken about, you've got some miners in the community. You will have to check those out. I'm aware of them myself. There's confluence there in regards to what's going to happen with silver. And that's the beautiful thing here. You're also looking at oil and perhaps the dollar. I don't know if you've got any take on oil and the dollar themselves. Maybe we could start with oil and how this kind of confirms the picture that you're painting here.
I'm glad you brought that up. It's perfect timing as well. Thank you. So, as I mentioned, I've thrown a lot of metaphors and diagrammatically try to help people visualize the system, the anti-fiat big circle, the slightly smaller crypto subset inside the big circle, who's the God market, who moves first, the V12. I've also spoke about the twisted balloon, the flush end and the flat end that's getting no oxygen, and that's the consumer and everything else. Let me just be clear. There's a potential for China to invade Taiwan. I don't, know the probabilities. There's a hot war in Ukraine, Russia. They're trying to flip Georgia like they did Ukraine to try get them to feed their male bodies to the mincing machine. All these dark statists are full of their usual murder, mayhem, population control, open a second front on Russia, and all of this. You've obviously got the genocide going on in the Middle East, various other aspects. This is warmongery, peak warmongery. Any one of these could flare up and go real nasty. You've got attacks that were landed on Iran recently, and we get an inverted HVF on the oil chart. That is a squeeze. It's very much an inverted draw for us, very slow on the up leg, fast on the down, a final little bump. It triggered some time ago. The trigger value was 72.43. It did pull back once to the axis level, which was 78.46, but your stops are up there on an HVF method setup. And this is a right shoulder, all on a much bigger head and shoulder. If I take you up a time frame and show you that, that suggests an even bigger target could be to the downside. The head and shoulder target is at 32.64. The inverted HVF is on 52.54. So despite all forms of possible wars escalating to an ever higher level, and boy, do wars consume oil and grease like no tomorrows. Try run a tank for 10 kilometers and see how much diesel that thing burns through. Boy, oh boy. And armored cars, planes, good for a bit. And they're actually refilling planes that are doing long-term bombing runs in the air. I mean, just think of the cost. Aircraft carriers, my God, I hope the point is made. Military-industrial complex is designed for the Rockefeller cartel in that it slurps oil like, like a Ferrari chases the horizon, as if the horizon owes it bad time money. It is pure consumption. Anyway, so this is a broadening structure, and it is an ascending broadening structure because the split is to the upside. It's again a megaphone, only on an inverted pole. So unlike at school days when you used to have those telecom poles and the little blaring speaker at the top, getting all the under nines together to run their 80-meter dash, this is an upside down one. The continuation is to the downside. We spoke to the community before this happened, and we said this is looking like we're going to get an acceleration in our bear call. So we've actually gone short oil and we are long gold. This is in a commodity complex. But to me, the one isn't a commodity. It is real money, and it is a reserve asset in a collapsing system where there are no more reserve assets left. It's filling the void. And that's why it's so exciting also for digital gold, for Bitcoin. This gapped on the Sunday. You close on this car. I just want to show this price behavior on a bigger screen. I'm going to zoom in a little bit. This is very dangerous, and it's very typical of how you break key levels. You closed on Friday on the green part. That is 72.43. You open on the Sunday session on that doji oil at 67.96. You've thrown it down $4 just starting the new week. There is no bid. And if there was, it was just an accident, the people that want to buy, they were just sleeping, they didn't have any bids in. Well, they haven't come in the next day or the day after. In fact, the next candle is trading down and has taken out the lows. And by the way, the neckline for the head and shoulder to trigger, which you've already triggered the HVF, and this is why we trade patterns within patterns, the neckline is not that far away, and it's at $65. This is in a war environment with 4 or 5 potential hot crises that could all escalate from the Middle East, China, Russia, Ukraine, you name it, all over, and untold, undiscussed ones that could all go down. And what is happening to oil? That is your consumer. That is your retail. And don't forget, previously in oil, where we had gap up, that was Russia cutting supply and the Saudis cutting supply. So they both cut prior to this and said they would reduce supply. So they were trying to right size, and this was when we were already getting suspicious about the strength of the oil market. And we're a rarity because all our gold long friends are also commodity long friends. And the key thing is you need to differentiate. You need to differentiate between an energy and a real money in a financial real money failing system. One is the economy is not great. People are not driving on long holidays. They are not buying tons of things on Amazon that requires delivery. They are not going on business trips on planes when they can Zoom. You're having a reduction of that. And when we look at the gold versus oil, the divisor of each other, you're in an inverted head and shoulder where gold is projected. It started at 28 barrels to get you 1 ounce of gold. And I will show you that chart as well in due course. But it's actually heading for 62. So that means gold is going to outperform oil at an almost 2x level because you're going to need 62 barrels to buy 1 ounce of gold soon. Now, imagine you throw Bitcoin in all of this, and Bitcoin is a higher beta and is moving. So you can see the sense of valuation. This is where, by the way, production cuts were announced and you got upside gaps. What happened? Fizzled all the way back down shortly thereafter. This didn't happen once. This happened a couple of times. What does that tell me? It's weak out there. It is weak out there. And that could be China also not spending. You know, they are in a bit of trouble. It could be Europe. You've got VW going bankrupt to higher energy costs after they allowed America and friends to blow up one of the pipelines, and they've not been allowed to use the other pipeline. Why don't they? Why don't they take the cheap gas from Russia? This seems Russia bad. You must suffer and pay more. Never mind your economy. This is a totally captured global political situation where the Zionists are running all the games, and there's certain countries that are being managed into collapse that will see banner name corporations go potentially bankrupt. And it would be a great sin, actually, for VW with beautiful brands like Bugatti, Lamborghini, Porsche got acquired and put in that, to see those brands disappear or be picked up by BlackRock and put under new management after these countries have been managed into collapse. And Keir Starmer, my UK friends, that's you, Rupert,
Unfortunately,
is out to do the exact same to the United Kingdom. And actually, for my Americans who are nodding about Europe and the UK, I'm afraid to say you're as penetrated and there's as many destructive policies out of intent, not incompetence. Intent, not incompetence. Hear me now. That are bringing you to your knees. And the debt failure of the American system will be part of that. That will lead to an interest rate spike. Many people thrown out of their homes, unable to sell. Job losses will occur. Houses will be recouped. And there will be a buyer of last resort for pennies in the pounds. And you know the name I'm probably going to say, who that will be. And you will be turned into a tenant in your own home. You will own nothing. And they will keep you on the farmer to make you happy until they decide to switch you off. That is the direction. If you don't, take your future into your own hands and build wealth, build liberty, and make it difficult for these guys to take you down. And that's the key message.
Yeah, absolutely. And this is all part of reset. You know, this is very much the agenda. It's a communistic one. And the amazing thing, and there's excitement in all this, you know, you shouldn't live on your knees. You should live on your feet. I really do believe that. The amazing thing with what we're discussing here today is there's a escalation towards all of this being predicted by the charts.
This oil, I'll show you the gold oil chart just so that you can see, because we gave this for free on the Market Sniper channel. Not immediately. The community is always served first. They deserve to be served first. They've respected us with money, as you did. And I thank you. And I'm delighted to have you as a member, by the way, as I am all my members, to be honest. They have a high standard of smart folk. It's a great board to be in. There's no shilling links and doing any nonsense. Everybody is to a high standard. This is an inverted head and shoulder that broke on. And what are you looking at? First, let me just explain what you're looking at. You're looking at gold divided by oil. And you actually had oil come back and hit close to $130 at one point. And this was before gold was at 2,780, like it is today. And this was the inverted head and shoulder that formed. This was the end of the shoulder. You continued to shoulder. This 28 neckline is the beginning. I've watched this candle grow. It gapped, by the way. That was oil gapping down and gold trading up. It gapped, and we see it going through the 62 mark and beyond. That means at one point you could bring me 28 barrels of WTI crude and you could get an ounce of oil. When we were watching it down here, it was 25. You're talking about 62. And we expect overperformance on that, but the target is the 61, 62 range. Wow. I mean, what does it go to? It could do 75 before it rests for a while. Who knows? So that tells you that consumer is wrecked, and burning oil is going to be less. And the Russians are going to want to keep making the income to buy the gold. And this tells you resource allocations. If you can understand where's the money flowing out of and where's it flowing to, it's never lost. It's like energy. You know, you can turn it into heat. It can be reconverted back, but it never disappears. Where's it flowing from and where's it flowing to? And there's this global liquidity that's made up of all these balance sheets. And if we have a demand-destroying event that dips us, the liquidity that will come out next will be second to none and will drive Bitcoin safely to that 144, which we think will probably see you go through the 150. We can't guarantee you that. We can't guarantee anything, but you've got a confluence of targets at 144, and this well through a major multiple to oil. So that's a lot of barrels of oil you have to buy before you get your 1 ounce. It's not very big, of pure gold. And that tells you monetary collapse. Monetary collapse and consumer collapse. Retail consumer collapse. That twisted balloon. The military's got all the oil it needs to fight wars and pay soldiers. You, however, that work a private job, layoffs, cutbacks, and the taxation they are bringing. This is another theme on reset. Anybody who makes any money, they are trial ballooning in Denmark. the unrealized capital gains. They've floated the idea in the UK and the US. This is basically where they get to say, and I want to cover this for you. They're starting in Denmark in crypto, and they've put it forward. It hasn't been final signed off approved, but it's been very seriously written up as a methodology. If you bought at 10,000 in 2017 and you went to 20K in 2017, by the time they said you made 100%, maybe you bought at 2,500, it was 780 at that same year. So it was a big year. You could have bought at 1,000 easily. But let's say you bought at 3,000 or 2.5, and you actually could have, you times that by 8. You made 8 times your money. They could come to you for a tax bill. If you put 100 grand in there in the beginning, you would have 8 times your money, you would have had 800,000. They could come with a 42% capital gains tax on the difference between your 100 grand and the 800 grand, 700,000. They could send you a bill for 300,000 just about. 42% would be round about there. By the time it was November of the next year, so this would all take place in the following year, they would send you the bill. You would be due to pay. You would have X number of months. By the time Bitcoin hit 3,200, a collapse from the 6K we called on an inverted HVF. It was in November. We had a theory weekend in Cyprus right here. We live streamed. This is what's going to happen. It happened. And you would essentially have to sell all your Bitcoin at 3K. And you wouldn't get enough. You would have had 100 grand at 2.5. At 3K, you might have had 120 grand. You would have had to find another 180,000 to get to your 300 tax bill, pay it, and you would have said, but, it's no longer worth 20. December the 31st, it was worth 20K. You pay then. You say, but it's not worth 20. They'll say, you get a future credit against any capital gains only on crypto in this space on that coin. So you would have a future tax credit. You would have no money and a loan for 180 grand to pay the taxman in real time frame. And you would have sold your 3 grand crypto. You would have lost all your Bitcoin. You would have sold out at 3.2. And you would have been sitting with 180 tax bill. And then they'll say, but if you ever find any money again and happen to get another 10 or 20x, you'll only start paying from 20K up. Capital gains.
And people don't realize how serious this is, because this, and you alluded to it there, they're coming for digital assets first. This will extend to directly being a war against personal property. So if you own a house, it won't be long before they start taxing you out of that. I don't know if you've got any sort of what you're really seeing. And again, the beautiful thing that I really want to not get away from is what the charts are telling you is that this is coming and the escalation of this is coming. And you're seeing it. Look at what we've got likely being announced tomorrow in the UK. We've got the budget. That's going to be full of a load of tricks and surprises. We've got somebody who's from Italy here themselves, who, of course, is, 42% capital gains tax. And now they're talking about unrealized capital gains tax. And it's very likely going to come, in my opinion, and not just stop at digital assets, extend to your home. Yep.
Yeah, it's a thin edge of a wedge. And because it's a new category of assets where they can bully people and there's not a lot of powerful people involved that aren't already on the dark state side, the extraction team, they'll get all the laws they want in, and then they'll say, but we do it in that arena, so it's time to do it here now. We're only making it equal, and it'll roll into property, it'll roll into anything. And when you get there, who determines its value? I mean, is the government going to buy it for the price they say? My property, what I paid, all the extra work I did to fix it up. I have quite a few. None of them have mortgages on them. They're going to say that's worth 3 times more. I say, find me a buyer at that price and I'll take it. But they're going to go, no, it's not our prerogative to do that. We're just here to value. You've already made a gain there, and they can extract from you, plus the risk of bail-ins with the debt and bank collapse, because the debt and fiat system, the intermediaries that are downstream for proliferating the new money that get the license from the central banker are banks, and they hold your money. And all the new banks clauses have bail-in clauses in them.
Isn't it?
I'm sitting in Cyprus where it happened. So the extraction and
Yep.
leveling potential is so high. You can't keep a great deal of money in banks. You need to be in gold and you need to be in Bitcoin potentially. And those are the leading anti-fiats, and you can rotate into the others in due course on the cylinder firing mechanism that I've described, how it rolls through the various stages. And because this is a far bigger cycle, be prepared to sit longer than you think in chapter 1. It's a big story. It's a big old book. And you've got to stay on chapter 1 till you've read the whole first chapter. And that's how it goes. And it's only when it pivots to chapter 2 do you do chapter 2. If you run to the end of the book to see how it ends because this is your favorite project and you like it, and this is the romantic bit or the dirty bit or the happy endings bit, whatever, that sounds dirty too. Whatever you go to, you're going to be sitting waiting. And you're going to be watching the fireworks be somewhere else, and you're not going to be at the party. And then, God forbid, it may not ever come to you in the way it ended up coming to all the other stages. So do not be too early in the final stage items. Recognize the firing order. And gold and Bitcoin should be the core portfolio. You'll know from the community, I say, if you've just got, let's say, 10 grand or 100 grand, you literally can do 85% gold, 15% Bitcoin. That's it. And we've spoken of a small percentage in another commodity, miners stroke silver as it rolls, and you can roll that percentage. And we've told everybody about our special favorite crypto that you can have 2.5% to 5% of and 10% in the Bitcoin instead of the 15. And then as it moves, you can move the 10% of Bitcoin, roll some more into the alt as we get there into our favorite other major crypto. But that's as simple a portfolio as you need. You can have 100 grand and run off that portfolio. You'll have physical gold. It's ticking up every day. You'll update your spreadsheet and you'll have a smile on your face every day. You can have your BTC, the bulk, the 2/3 of the 15% at 10% initially or 12.5%. And you slowly let that 2.5% shed in as we get closer to the alt run. But we will be there watching and waiting for that. But right now, you need the God market. And this is what this is doing today. During this course of a week, a gap up. This week's brand new. It's Tuesday. This is how it's moving. And that is retail consumer down, new reserve money system, the old reserve money system, the original one before the coin clippers spoilt it all, gold. And you're going to see some of that echo and go through the crypto market as well.
Wow. Do you know, we've covered so much. We've covered so many topics. The portfolio that you put forward there, of course, I'm well aware of it myself. What people have got to realize is where we are in regards to the debt-based system, and the fact that actually just surviving this is a merit in your corner. You know, just surviving this, you're going to do well. If you can actually arbitrage and make money out of it, now really isn't the time to be taking extreme risk because you don't know that that risk is going to even survive. You want to go with what's clear, blatant, to see what's technically signaled, like we've looked at with Bitcoin. We have, and if you want to go and check out Francis's work on gold and also silver, I know there was a video put out, I think it was a few days ago, on the Market Sniper, and you've always got a great host of guests on there. Guys, it's time to prepare. It's time to start paying attention and time to start looking into what it is we're talking about here. The last thing for me to do, Francis, is really ask you where people can go and find more about yourself. We'll leave links to it all in the description. But if you want to just give a quick plug in regards to your website, what it is you do, the floor is yours.
Thank you. Just by the way, while we've been speaking during the course of this interview, we're at about 71.5. We've gone to 72 and a half now on Bitcoin. So that's great. We've picked up $1,000. Well done if you're in Bitcoin and engaged there. I don't romanticize about it. It's a digital money on-ramp for me. But look, it's coming whether you like it or not. And if it's going up, we need to build our wealth in it. The key thing is you also need to protect yourself from these capital gains extractors. And this is the thing we didn't talk a lot about in this community. I spoke about charts. I spoke about what I feel is going up, what's going down, how you must order that. We gave a simple portfolio, but you could make that money and have most of it taken off you by an extractor bank. And it's actually very important. The West is in decline. Most of the people that are in the prime ministers or WEF prime ministers, they are kamikaze pilots designed to take the 747 into the mountain. with all of you on board in terms of a financial context. You'll be financially wrecked, and they will give you the farmer pills to keep you grinning like a chimp. But at the end of the day, I don't want you grinning like a drugged up chimp. I want you being free. If you're sarcastic and cynical, I want you still being sarcastic and cynical if that's who you are. It's who I am occasionally. But to do that, you need everything. You need to build wealth, but you need to preserve wealth too. And that could even mean escaping from, and this is very unpopular. It's not the requirement. You don't have to do it first thing. But we've got people that are in the UK that over 3 years have been in the community, have left the UK. I'm talking with kids. They have new schools. They've got better tax structures. They're retaining more of their money. They're doing all sorts of things, bank accounts, profiles outside, different passports, citizenships. There's a lot still to be discussed here that will bring a little bit. And remember, they're trying to capture the whole game. They don't want too many rats to escape the barn. They want to burn us all down with it. But if you're smart and canny, that you can get away with not only building wealth during this period, and I aim to help you achieve that in our community, but also preserving it. That's very, very important. To get an idea of what we're about, you can follow the Market Sniper YouTube and, of course, the Crypto Sniper YouTube channel as well. Both have the in front of it. And that we're also on X with the same name, and we post and share the odd chart occasionally. And by the way, on the Market Sniper YouTube channel, there is a free course link. You don't have to do anything that involves money. You don't have to book a call and phone anybody yet. Watch YouTube's and get our free course. There's no spam coming your way. We don't sell our list. Rupert will tell you he's never received an item that's as a result of us or JV. And the only thing we'll send you is a newsletter probably once a month, just telling you what we're doing and reminding you what it's about. You'll get a video delivered each day to you that will introduce some of the concepts I've flown by today. If you heard something that was kind of interesting, but you're not quite sure that you got it all, get your free mini course on the YouTube, register there. Costs you nothing. No one's going to hassle you. And you can enjoy the 2 YouTube channels. If you get to a point where you feel ready, we like to have people discuss this with you in person. We tell you everything you need to know, and you can ask questions. Plus, we show you what you get before we go into pricing and what's involved. And yeah, thank you very much for having me on. Remember, it's a PSYOP. You need to keep your mood and mentality up. I laughed my way through this. I live a great life. I was scuba diving just the other day with a 3-legged turtle. I swim every morning in the sea. I have a great life. You can too. And that's true wealth, really. Counting beans in an account, or Satoshis in a Bitcoin, or silver and gold worth, that is almost a technical exercise. But having properties that you can move around to live in and fight the PSYOP of what is being perpetuated in us. And it is totalitarian. Rupert's 100% right when he says communism dressed up. And you've got to protect yourself against this. We're going for a down cycle. It is the West is going to be the worst, and watch out those banks. So time to protect yourself, and we aim to help you do that. See you next time or on the YouTube channel.
Yeah, thank you very much, Francis. That has been an absolutely jam-packed episode, guys. I'm sure you'll all appreciate Francis taking the time out to come and talk to us. Until next time, Francis, links to where you can find him in the description, the course that he was talking about, the free course, also where you can book a call in the description, his socials. Go check him out, guys. That's it from us. Thank you very much, everyone. See you all in the next one.